fundsupermart.com.
What are your thoughts on the ongoing eurozone debt crisis, and what is the base case the team is working with?
Well, we do have some problems within Europe, clearly. We have a eurozone crisis at the moment. So one of the problems is trying to work out what's going to be happening over the next few years. And I say a few years because I believe it will take a number of years to solve the sovereign debt crisis that we have in the eurozone itself. We will have greater political union, but clearly we're talking about a number of different countries with different agendas. So it's not going to happen overnight, I'm afraid. The thing for us, though, is that we tend to be investing in the best quality companies, which are very international in their operations and are well managed. So whilst there is the ongoing debt crisis, whilst there are concerns in terms of how it's going to be resolved and how much money it will cost, we actually are fortunate enough to be the stock pickers that we are and invest in companies that can withstand those difficulties and take advantage of opportunities internationally, and I mean in terms of global operations, and make money for their shareholders that way.
Given the uncertainty surrounding equity markets for most of 2011, how did you position the fund over the past year, and are you making any changes to the fund's positioning since investor sentiment started picking up in 2012?
Well, we're not short-term investors or traders or anything. When we invest in companies, we are taking a long-term view, and by that I mean over an economic cycle, typically, certainly more than 5 years, typically 7 or 8 years or so. So yes, occasionally we will take advantage of movements in the markets, and that occurred in the height of the eurozone crisis last summer of 2011, and that enabled us to move some of the portfolio positions, i.e. exit some stocks that had done very well and buy some stocks that had perhaps performed poorly but still had very good long-term opportunities. So that was a good moment for us, if you like. But typically, as I say, we are taking long-term positions in these stocks because they have good prospects over the longer term.
The fund has a pretty strong record over the last 3 years relative to its benchmark. What were the main reasons for this outperformance?
Well, I believe it is all about the right kind of companies we've been investing in. These are companies that are typically selling goods and services to customers that those customers really need. These are perhaps a small component of the total cost of goods sold for the customer, and yet of absolute crucial importance, i.e. a project would fail without using that particular good or service. And that will enable the company that we invest in to have pricing power over their customers. There's also an element of servicing as well, which is very high margin. So what we're talking about is investing in companies with very strong business models, which we believe have sustainable cash-generating capabilities and power in terms of pricing power over their customers. So these are the good quality companies that we can find in Europe, and we will be investing in those companies.
Can you briefly talk us through the rationale behind the fund's top 3 holdings?
Yes, well, our largest position is actually in our own European Small Companies Fund. Some of these European small companies are extremely well-managed companies, and we own our own fund because it's the same investment process that we use, and we gain a greater level of diversification through investing in the fund. The second largest holding is Nestlé. Thank you very much indeed for reminding me. Yes, it's a global food company, tremendously strong, great operations, very good at innovation. We always think of Nespresso, for instance, which made 200 million sales Swiss francs in 2000, and last year made 3.5 billion of sales. This has gone tremendously well for them, but it took them 15 years of research and development. So here's a company that can push through cost savings, and innovation is the key, and that gives them a competitive advantage in terms of pricing power.